The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the Valentine's Day, February 14th day of the Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Valentine's Day. And we begin our day out here with a mixed bag. You've got the Dow that's trading down 8, so there's a little bit of red for you. And the S&P is up 9. The NASDAQ 100 is up 46. Russell's down 5. Treasury's up 108. Semis are up 3 points. You've got gold that is trading. Where did Goldilocks go? Gold is trading down at $29.17. That's off $27. That's about 1%. With silver really finding its mojo, trading up 42 cents. It was up much larger earlier, trading out at 33.14. Light sweet crude have a little Valentine's Day red into 32 cents, down 32 cents. You've got copper that's off 12 pennies out there. You do have natural gas chart that I've got up on my screen. You will see that today it's going to go ahead and complete a TD9 count top. What that should do then is it should result in price moving back towards this oscillator and change line that's currently printed at 353. You can see that the weekly TD9 count top is still in place out here. That would be negated if we were to see a close above its high. Its high is at the price point of $3.77 out there. Natural gas is looking like it's made a nice, decent, longer-term type bottom, so I'd be watching for this retracement, and it may just be simply nothing more than just a 2-bar retracement to the downside. That's what's going on with the daily chart. Well, it's going on with the charts with natural gas out there. I did mention copper earlier. Well, that was during the update. Copper does have a TD9 count top out here, so we'll take a quick peek at that. That suggests that price should pull back. Its first level that it should pull back towards is its oscillator and change line for its daily time frame. That's currently printed at $4.58 out there. You do see that there is a new daily profile that has formed. That new daily profile has support at $4.44. So if for some reason, high-grade copper closes below its green oscillator and change line, that would become its downside price target. Looking for the TD9s out here. We've covered natural gas. We've covered this. Avgo, Broadcom, I don't have that up on my screen. So what we were really originally going to take, I want to see if this is actually picking up the proper signal out here. And the answer is it is. It's got a TD9 count top. It formed on bar number 8 out there. Now here in the case of Broadcom, I mean, look at it's amazing. That's really quite an amazing TD9 count top. It didn't have to exert a lot of energy in order to form that pattern. Price is trading below its green oscillator and change line. So that would say or suggest that Avgo would go target support, which is either 220, 291 or 213.51. The first was the top of the profile. The latter was its TD9 count breakout level that's established by that TD9 count that we were just taking a look at. Nothing else necessarily here to look at. So let's do this. Well, what I want to do actually is, there's a couple questions that came in yesterday, and because right now I do not have my e-signal charts up on my screen, but there was Hector and Patty had written in about the U.S. dollar index, and so I was pretty much just showing. Well, I know I was just showing the euro, the yen, and the pound out there. But what I want to do is, let's see if I can do this here, if I can pull this off. I went ahead and grabbed some charts before the show started. And some of those charts, here's the U.S. dollar index. So this was a snapshot from about 10:30 out here. The very left, so you're going to see the yearly for the U.S. dollar and the yearly for the euro. The key level to be watching in the euro is 1.034. It has traded below that level, and if it does trade below that level, what it's going to do, first we'll be below last year's low. And if you're looking for something bearish or bullish, well, bearish would be trading below last year's low. Bullish would be trading above last year's high, especially this early in the trading session out here. We can see that, so that's at $1.03. The euro actually could trigger an A to B equals CD pattern to the downside. Then it would get us towards a 70-cent level out there. The U.S. dollar index has already triggered an A to B equals CD to the upside. And that suggests a move back to its highs in 2000. That's in the 120-ish level out there. If we look at a monthly time frame chart, we can see a consolidation measured move breakout. Price right now is pulling back and testing support. That's its oscillator and change line. The weekly time frame shows that price is now below, or was below, its oscillator and change line out there. That suggests that the U.S. dollar could pull back or should pull back further. And I would say on the daily time frame, if in fact its TD9 count bottom pattern fails, and that's what it looks like at this moment in time, we would then see a retracement back towards 105.74. Now, when you take a look at the euro on the monthly base, you can see its consolidation measured move. Price right now rallying right up in towards that resistance level. On the weekly time frame, price is trading above resistance. If we look at its oscillator and change line, and the daily time frame chart is suggesting that price might go target its TD9 count breakdown level. That's at 1.059. So that's what's going on with regard to the dollar and the euro for its for its longer term time frame. Here is gold. In the case of gold, as I mentioned, there's nothing more bullish than trading above last year's high. Well, take a look at Goldilocks. We're bar number 9 from a yearly standpoint, but we are trading above last year's high. If you look at the monthly time frame chart, no topping pattern there. The weekly time frame chart, no topping pattern there either. It's a daily that has that TD9 count top out there, and it needs to close above the high from 4 sessions ago. I don't recall that number out there to negate that signal. Support out here for the gold contract right around the 28.96 type level. If you're looking at silver, silver is not trading yet above last year's high, but if it does, that would be a bullish message. The monthly chart has a sell the D point top, with price basically finding support inside its profile. The weekly a TD9 count top, but now price is trading above the top of its weekly profile, and it's likely going to go target that TD9 count top. And finally, that's the weekly time frame we were looking at. And finally, on the monthly time frame, there's a possibility that a daily TD9 count top would get negated today. So that's what's going on for those 4 time frames for Goldilocks and silver. Here's light sweet crude charts just before we get to the breakout there. What's most important thing here? Really not much at this stage of the game. Both natural gas and light sweet crude are still trading inside of last year's high, but natural gas is getting really close to trading above last year's high out there. Steve Rhodes with TFNN. We come back to this break. Let's take a look at CELH. Let's look at Seasonex for Duncan. But what was it that it was about that you wanted me to look at? I forget. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So, in that last segment, we're taking a look at gold is trading above last year's high. That certainly is a bullish message for us. But I do have the intraday charts for gold up on our screen. We know we've got to still have a daily TD9 count top at your upper left-hand side. We can see prices still trading above profile support as well as holding support at its oscillator and change line. It's a real key level. You can see on the 5-hour chart, 2906 is a TD9 count breakout level. That's been tested so far. That's held. 2912.90 is the 4-hour TD9 count breakout level, and we've got a 30-minute TD9 count bottom. So it makes this key level. The key level is 2905.60, the area to watch. A close below that on the 30-minute bar is going to suggest lower price. It's also going to suggest that we have a change in trend out here. What I'm referring to is if we take a look at the 4-hour time frame chart, and this takes us back into the December time frame out there. And what you can see here is that we have not closed below a TD9 count breakout level since the late part of December out there. The first time that we broke through that level was at about 2 o'clock in the afternoon on December the 30th. So your price closed below 2912.90. That's on a 4-hour bar. This bar here is going to complete at 2 p.m. It's going to tell us about a change in character inside of the gold contract, in my opinion. What that would also open up the door to next would be its next breakout level, which would be 28.79 out there. So gold has done its work. At this stage here, the question is, do these support levels hold, and does the TD9 count pattern for the 30-minute time frame chart hold? I don't know the answer to that question, but I most certainly wanted to share that with you. Now let's go on to our first request coming in from Brent this morning. Thank you for sending that in, Brent. He wants to take a look at ticker symbol CELH. And he identified a TD9 count bottom that completed yesterday. It also, Brent, completed a Rhodes Momentum Indicator bottom. Nice bull sash candle. And price traded from the bottom of its new profile to the top of the new profile. Bottom being 2137. Top, we're testing right now. The top is at 2272 or 22 22.80. You'd love to see it close above 22.72, Brent. Why? Because on the daily chart, the next upside price target would be 26.21. Now, in a weekly time frame, we do not have any kind of a bottoming signal. You'd love to see a bullish reversal candle. You can still get that this week. We just need more rally left on the daily time frame, if you will. But if we don't get that, that's what you would be looking for. Short of that, price might head lower. Now, the monthly time frame chart looks like it will form at the end of the month, bar number 9 of a TD9 count. It could complete that pattern the following month, meaning it could complete it in March. The low of that pattern could be on bars 8, 9, or the bar following bar number 9 out there today. So it looks good on the daily, looks very good on the daily. You'd love to see it just stay above that profile level and keep pushing its way higher out there. So I hope that helps you out. And as always, thanks so much for your request. Duncan Steve was asking about on a seasonal pattern, was asking about, I do remember now, was asking about the month of February, the last half of February. So it may have been, now what I don't know, Steve, was it the S&P 500 that we were looking at? Well, here is the S&P 500 as we speak right now. And that red vertical line, that is where we're at today. So what you can see here, this is the 97-year seasonal cycle. It means it takes every year, and yes, the markets are closed on Monday. It takes every year, and it sums everything together. So this is what the average looks like. And on average, we typically see a top that forms right around February the 16th and then moves lower into about February 28th. So a good eye there, Steve-O, with regard to the seasonal pattern. That's the normal seasonal pattern. The question that I pose is, are we in a normal seasonal pattern? Now, I don't know the answer to that question, but what we can at least do is we can say, well, what did you even mean by that question, Stevie? Well, what I meant by it is what we are in is we are in the election cycle, not the year of the election, the first year after the election. And that's what this chart here looks like. So this chart shows that usually the market or the S&P 500 begins moving lower in the early part of February, and it bottoms towards the end of February out there. So both patterns, whether it's the presidential cycle or just the regular cycle, they both show a bottom towards the end of February out there. So I hope that provides you with what you were looking for. Now, if we can go to a shorter term time frame chart. Here would be a 25-year chart. This is not taking into account any of the presidential, just simply what has transpired over the last 25 years. And over the last 25 years, we typically get a top right around now. That top typically takes us into a low in the middle part of March out there. So that's what's transpired over that time period. How about the last 15 years? Last 15 years says, well, you maybe get a little bit of a top that lasts through about the middle of March as well. Not much of a significant decline. That includes the 2020 data that we've got in here. So hopefully that took care of your answers or answered the questions that you had with regard to February out there. You said there was something else. I'm just going to keep going here. I may have forgotten to put something in, and if so, I'll just simply come back to it. What did I put in here? NVIDIA. So this is for Eddie. If we take a look at NVIDIA on a monthly basis, you just have a consolidation with inside its monthly profile. The same thing as well on a weekly basis. Price now is traded above the top of its weekly profile, 131.60. That is a nice bullish outcome. That would suggest a move up to 143.29. Today, though, is going to become bar number 8 of a TD9 count. That says that the high in NVIDIA is going to be between today, Tuesday, or Wednesday of next week. The market is closed for President's Day on Monday. That's why I say Tuesday and Wednesday of next week out here. If you look at NVIDIA for its 195-minute time frame out here, price negated a TD9 count top. It's actually an A to B equals CD pattern to the upside. On the 65-minute time frame chart, though, it looks like it's getting ready for a bit of a timeout. The 15-minute and the 30-minute have confirmed Rhodes momentum indicator tops. They're suggesting that price retraces. The areas I would watch first would be about 136. If we get below 136, you can easily see a move back to the 135.09 level. That's what I see, Eddie, when we take a look at NVIDIA. The next request was to take a look at PSLV, and that was for Fletch inside the Tiger's Den. He's looking to enter here, and on a daily time frame out here, you still have a TD9 count top that's in place out there. Your price closes above the high today, though. The high of 1104. It will negate that signal and suggest we move higher. Of course, the suggest we move higher would have taken us right to where it did this morning, which was its TD9 count breakdown level. That was at 1127. I also see wave number 7 out here. That's letter G on my screen, Fletch. So in order for that top to form, you need to see a lower high. So getting back to a breakdown level can be a top. I'm going to go with that's a top. You're also in wave number 7. That doesn't get confirmed until the end of Tuesday out there. So now what you're watching for is on retracements here, how does price deal with support? The first level of support is $10.98. That's the top of its daily profile. The second level is at about $10.85. That's both the center of its profile and its oscillator and change line. And then the bottom of the profile will be $10.72. Those would be the areas that we'd be looking for on a pullback. And then, of course, what you and I would like to see is some type of 30-minute or 65-minute or 15-minute bottoming signal out there. No reason for us to look at it now because there wouldn't be anything. So that's what I see when I take a PSLV. So you may get your chance to buy it at a lower price. Maybe you ladder in. This would be, it hasn't had many days to the downside. It's only had 1 day to the downside out here. It's been doing that since about the middle of December. I'm sorry, since the beginning of January. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we're taking a look at the spies out here. This is for the dog tour inside the Tiger's Den. We're looking at the swing point out here from the trading session of January 24th. The high on that swing, 610.78. The high of the day so far, 610.99. So that swing point has been tested. Thus far, it's been rejected. Now, the volume on that swing point was 34 million shares. Yesterday, we closed inside that with 40 million shares. That was the first signal that price would go test at least that high. Now the question, what kind of volume do we get today? Been trading for 2 hours. We're at 7.4 million shares, so we're much lighter volume than we had yesterday. This equates to about a 25 million share day versus yesterday being at 40 million. So that would be a test and rejection if price were to close below 610.78 today. If we close above 610.78, it doesn't even matter if it's with lighter volume. Then actually, it would trigger an A to B equals CD pattern to the upside. The question is, will the SPY pull all the way back to that blue horizontal line to fill the gap out there? And that is the high from January 14th, and that high was 585 even Steven. I do not know the answer to that question. I'll share with you a few things, though. The first thing is that if we do get a top here, and testing and rejecting a swing point on lighter volume can be a top, then the first level of support, you just have to take this in stages. It's the only thing that you can do whatever you want. I'm suggesting that what you should do is take it in stages and identify where support is. So the first level, 606.49. That's the oscillator change line. That number is going to change as price is moving up and down. Use that as a guideline like Jack Sparrow. 602.15 is a fixed point. That's the top of its daily profile. Now, if there's new profiles that form between now and then we would take a look at those, but let's use what we have today. So the first level of support, 606. Second, 602. Third, 595.67. Fourth, 591.36. Fifth, 587.45. So those are the levels that price has to get through before it gets to 585. But why stop there? The question was, will it get back to fill that gap? And to have that conclusion, then you must, I would think, have that conclusion that all gaps get filled out there, right? We're familiar. We've heard that before. But is that true? And maybe it's eventually true, but that's about it. Geez, I don't want this thing to I don't know why I'm having trouble here. Well, let me try to do it this way. Whoa, well, that was not the way to do it, Steve-O. Let's try this one more time. So what this is a daily chart for the SPY. I won't open it all the way because I'm just going to simply, I don't know why I'm struggling with this, but this shows us all of the gaps out here. So, you say it's going to fill that first gap at 585. Well, why wouldn't it come and fill this gap out here that we've got in November? We can go back here to another level back in September that's got a gap that's open. You can come over here into August. Well, that gap actually got filled in August. Can I move this way? Yeah. We've got, there's the SPY. Here's some gaps from back in the May timeframe that are open out there. Here's some gaps. We go back again. I can go back fairly far. Here's some gaps from back in November of last year that are still open out there. So are all those gaps going to get filled? And maybe at some point in time they will. And that point in time would be when we enter a bear market. Are we entering a bear market now? My answer to that question, and you've heard it before, is absolutely not. At least not the signals are not there to suggest that is the case out there. So will it get back to fill that gap? Don't know. But what you can do is take things one step at a time out there and watch those support levels should price, in fact, pull back. So I hope that helps you out, Doctor. Let's go on to our next request, which was to take a look at ARKK. It's for Glenn inside the Tiger's Den. ARKK is trading out at 66.61. It's in a daily bullish breakout mode. It's trading above profile profile resistance and its green oscillator and change line. So that suggests that it wants to move higher. I do see the potential of a wave number 7. Let me just pull this back and see these notations out here. A, B, C, D, E, F, G, and it started right back over again. Well, it's gapped up. It needs a Rhodes momentum indicator. It needs a bearish reversal candle to confirm a Rhodes momentum indicator top. The weekly chart also triggering wave number 7 out here. What the heck? I mean, this one's going to be easier to see. Yeah. Now, I have to go back and actually manually do the counts on this one. But you are trading about profile resistance. So ARKK looks good, and you're trading about profile resistance on the monthly time frame. I don't see anything here other than these potential, and I don't really think that they are wave number 7 tops that are in place out here. It looks to me like ARKK wants to continue to rally further, Glenn. At least we don't have any topping patterns or price to trade above all resistance, that being profile and its oscillator and change line when I say all resistance out there. Let's go to our next request, which is a take a look at ticker symbol LCID. This is for Jack inside the Tiger's Den. Jack, this is traded above its daily profile, bearish structured profile, closed above it yesterday, you're trading above it today. So it's trading into a swing point from the trading day of January 6th. That swing, 121 million shares. You're moving into it so far with 43 million shares. So 40 times 3, you're moving into it with similar volume. So that's a good thing out there. If you do close inside that swing point, that just requires a close above 332. You're likely to go target the 364 level. Before you get to 364, you've got to deal with a little bit of an agitation, and that's at 348. That happens to be the top of the weekly profile. And if you can clear that, you got the monthly top of the profile is at 380. So you got to deal with 348, and then then you'd get to the 380 mark out there. You get to the high of that January 6th swing point out there. So everything here looks pretty good. Day number 4 of consecutive moves to the upside. You could be getting ready, or LCID could be getting ready for a 2-bar knee-jerk reaction reversal to the downside. Rahul would like to take a look at Alibaba. BABA is the ticker symbol. Bar number 7 to the upside, gapping up today. No topping pattern on a daily time frame. No topping pattern on a weekly time frame. No topping pattern on a monthly time frame. Alibaba looks like it wants to head higher out there. Head higher to where? That's really a great question. I'd like to be able to give you a number, but let's take this weekly chart. Let's open up this weekly chart, see what we have here. There's an A to B equals CD pattern that I'll draw in. So come all the way to the low back in January. And then we take our B point is going to be this high back in October the 11th. I'm just simply going to go ahead and move this A to B point over to the C point out there. And so your 1-to-1 price projection out here on a weekly basis for Alibaba would get us up to 131.08. But I would venture to say, again, all I do is just move that exact line over to the C point. Look at how price is on the left-hand side. This is a strong move, much stronger than the A to B leg was. This is suggesting that Alibaba will do more than a 1-to-1 A to B equals CD pattern to the upside. Steve Rhodes with TFNN. We come back to this break. We'll look at Palantir, RGTI, SFM, a general market question for Robert, IBRX, Meta, and that's about it. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's look at Palantir out here. Palantir has a TD9 count top for its daily time frame. That TD9 count top would be negated with a close above the high of February 11th. And that high was 118.66. We're at 118.37. There's a new profile that formed a few days ago. Profile resistance is at 118.66. So you take out that, you negate that TD9 count top, and you would head higher. There is no weekly topping pattern out here. A bearish reversal candle would confirm a Rhodes momentum indicator top. Short of that, price should continue to move higher. On a monthly time frame, there's no topping signal here. So it's really all about the daily topping signal. And if it were to ever close below the center of its profile, that's at 110.62, that would suggest that price would pull back towards the 94.55 level. A close below 94.55 would bring 78.47 into play. I'm not saying that's going to happen. Everything here looks bullish. Of course, it's more neutral on the daily time frame. Neutral because price remains above its green oscillator and change line. So hope that helps you out there, ELO. Duncan wanted RGTI. So we got that on the multi-time frame set of charts here. When I take a look at RGTI daily time frame, I don't have any kind of a topping pattern. I'm sorry, that's the monthly time frame. No topping pattern there. Weekly time frame, price is just pulling back to test support, which is the oscillator and change line. That is currently printing at $11.47 out there. Price would have closed below that. Your next area of support, Duncan, on RGTI for the weekly time frame, $9.34. The daily time frame has got that TD9 count top out there. And we do have a new profile that is formed. So your support level for this is down on that daily time frame is 1128, and resist is up at 1472. So you're just trading with inside that level out there, just a bit of a consolidation. Price should rally. The reason why I say it should rally is because you got a 195-minute TD9 count bottom. But what it's dealing with here, it's dealing with the center of its profile and that red oscillator and change line up at the 1230 level. So if price can start trading up 1230 for you, Duncan, you ought to see 1325 to 1385 on it. That's what I see when I take a look at the charts here for Rigatoni, RGTI. Hector and Patty wanted to take a look at ticker symbol SFM. So we look at SFM. This is a bit of a rocket ship. In fact, on a monthly basis, this negated its TD9 count top last month, and it's continued its move to the upside out there. So it had a 1-month pullback That was it, and it's continuing its move higher. It does not have a weekly topping signal out here. However, a bearish reversal candle would confirm a Rhodes momentum indicator top, and the same can be said for the daily time frame. Now, we do see A to B equals CD patterns that are out here. We can see several of them. Let's take a look and see what we can see. So, if we go back there, that's really, then we'd be dealing with the weekly type stuff. Let me open up the weekly chart out here. Because on the daily in this leg here, I don't see within it an A to B equals CD. So this is Hector and Patty, I mean, this is a big A to B equals CD. Even if I'm conservative out here, and conservative just says I start with the June 14th low. Why choose June 14th, Stevie? You could come all the way back here to November 10th in 2023, or you could come all. So at this stage here, I'm not going to give you a price projection. I think it's kind of futile at this stage here. But it's in rally mode. It's in breakout mode for its daily, weekly, and monthly time frame. So, yeah, this should continue to head higher. So, Hector, thanks for pointing that out, and the best of luck to you on that trade. Let's take a look at IBRX. This is for Dan inside the Tiger's Den. IBRX is trading above the top of its daily profile right now, Dan. That's at 343. So no resistance. Your resistance, and it's trading above the weekly profile. The weekly top of that box was at 330. So no resistance there. The daily and the weekly are ready to roll. What they're dealing with here, Dan, is that monthly oscillator and change line. So that's a level of resistance. That's currently printing at $3.74. And, of course, stock is printing at $3.74. So if price can clear that, if it can start trading above that, it should continue to move higher. The next upside price target out there is probably its TD9 count breakdown resistance level. That would be at 485. So when we looked at the SPY maybe filling some type of gap to the downside, we'd be saying IBRX is going to go fill a gap to the upside. That's where that TD9 count would take it to. This also, if it can close above the bar from January 29th, do with more than 14 million shares, close above 372. That'll trigger an A to B equals CD pattern to the upside. So far today, you're at 7 million shares. So it's got the volume to trigger a confirmed A to B equals CD pattern to the upside. You just need price to help you out there and do the same thing. There's basically your A to B line. And if I take that and just move this over to the C point out there, you'll see that gets up towards that TD9 count breakdown level. It doesn't get you all the way up there, but it does look like this wants to move up towards that 485 area. That's on IBRX. ELO wanted to take a look at Facebook. Our Meta, META is a ticker symbol. This is in another world of its own. It completed a TD9 count top yesterday. And you know what prices said? I have got no clue what you're even talking about there, Steve-O, because I want to move higher. In fact, that's what it's doing. And a close above yesterday's high negates that signal. Yesterday's high out there was 729 even Steven. So much for those even number highs out there. If we take a look at the weekly time frame, there's no topping pattern here. A bearish reversal candle would confirm a Rhodes momentum indicator top on the weekly time frame. On a monthly time frame, you are in bar number 7 of a TD9 count. This has got at least another month, maybe 3, to move higher before it would complete a TD9 count top. But Facebook is on the run, and Stevie doesn't see anything here at this moment in time holding it back other than just consecutive moves higher. I'm looking on this daily time frame out here. On this daily time frame, we have not seen a 2-bar pullback since January 14th. 1 month ago today, we have not seen anything more than a 1-bar pullback inside of Meta. Wow, that is a runner. The next request was to take a look at the AGEN. No, maybe that was just to post a chart out there. Yeah, that's what that was for. Okay, so I've got a question that has come in from Robert, who's asking me about the markets in general. So I'm going to actually do is I'm going to do 2 things here. First thing, I'm going to switch charts. We're going to go to a different screen, and then I'm going to get my black background. I didn't mean to stop streaming. I'll get that set up again here. So we're going to be right over there. I'm getting the black background chart set up here so that I'll be able to better answer Robert's question. But I will read it to you. Oh, Lord. Okay, I'll start reading it to you. It says, happy Friday. Happy Friday to you. I've got a general market question. You've said over the last 2 weeks you don't believe that we are in some type of major top. That is correct. I don't disagree with you. That being said, I can see the market experiencing retracement back to the mid-January lows, basically keeping with the trading range that we have been in since election. Do you mind doing an analysis on the diamonds, as I think it's much easier to trade than the S&P 500? Do I use the RSP? I do. That's the equal-weighted ETF. So I'm always using the equal-weighted ETFs, Robert. The RSP, the QQEW for the Qs, the EDO for the Dow. Now, what you're looking at here are the charts for the S&P 500. Well, she asked me to do the diamonds, but I've got the S&P. I didn't see that part of it. What we know is that today we know that the SPY itself has tested and rejected its swing point high. I don't think we've done that inside the S&P 500. The swing point high in the S&P 500 is up at 61.2818. We've been up to a high today of 61.2747. So it has not tested that high. When I come back from this break, I'll try to get my entire thoughts together to answer your question in about a 2-minute stretch out there. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. I kind of screwed up during that breakout there. I had to close down these charts and reopen them again, and they're still populating. So the SPY did take out, did at least test its all-time high. The S&P Cash Index did not. The S&P Cash Index is not reflecting dividends on distributions and so forth. That's why that hasn't tested it. If we take a look at the RSP, though, the equal-weighted ETF, which has got a TD9 count top that is still in place out there, it has not taken out its all-time high. In fact, we're not even close to the equal-weighted ETF doing that if you take a look at this year. So your question is there still the potential for some type of pullback? Of course, there's always the potential for that out there. You're talking about, will this thing get back to its January lows out there? So what you're setting up is the range, basically. I won't forget it. It would be the low of around January 15th, I believe, is a trading session out there up to the high, that swing point that we just took a look at. I wish I could be more specific than that, but I just can't get that thing to work. So I'm going to switch screens again and go over to the black background screen, because you were asking about, do I use the summation index, the McClellan summation index? And the answer is I do. How we use that, though, I'm not showing the summation index on this chart here. I am showing the advanced decline oscillator line, which is what Tom uses on that summation index when it starts to change color out there. And so at this stage here, we do use this. When the advanced decline oscillator is above the zero threshold level, which it is right now, it tells you that generally speaking, we are in that the buyers are the ones with an edge out there. So we do use this all the time out here when it's below zero. We use this to help us identify when we get to oversold and overbought conditions, those being the plus 150 and the minus 150 level. And basically, we're out of time. So can the market pull back? Yeah, sure, absolutely. But we're going to have to take that one step at a time, too, on any move to the downside. Folks, stay tuned for all the great programming. Have a happy Valentine's Day. Have a fabulous weekend. Enjoy your Monday holiday of President's Day. And I'm not even a president. I get to take the day off. I love it. Be safe out there. We'll look forward to seeing you on Tuesday morning. Take care.